The next topic is something actually everybody knows about it, but not many people actually understand what it takes to ensure how we do business is going to be for the good, for the business and for the people. Um, Kishan Jasani is actually the CEO of Grant Thornton. Collectively in Malaysia and Cambodia, they have 1,200 staff. And if any single entity that you need to comply, like Bursa Malaysia, London Stock Exchange, Singapore Stock Exchange, Grant Thornton is the one that is helping to do the audit. So I think we have to listen to what Kishan has to say. Over to you, Kishan.
Thank you. You can use the rostrum, right?
Yes, you can.
Yes, can everyone hear me? Okay.
Can.
I think you should all try to, I know this is it's not a very exciting topic, and as always, the auditors will come in at the end of the year, right? You'll see them in January and February next year, the moment you start your audit process and your financial close process. So bear with me. I will give you a run through the entire topic about, or dare I say, the elephant in the room, which is greenwashing. And I hope you can go home today with something from this conversation. First thing, I'd just like to thank the moderator, Tasha, for introducing me. I would also like to thank Daniel, the CEO of ASLI, for having me, and also our lovely band, a very, very, very good band. Felt like I was in a jazz concert. Okay, so let's talk about the elephant in the room. So Daniel mentioned about the song Zainal Abidin Hijau. And I'd like to quote a particular lyrics from Zainal Abidin's Hijau, which is, Pasti lambat laun hilang, duniaku yang malang. What does that mean for our non-Malay speaking colleagues? If you wait for too long, you're done, you're over. And remember, we only have one planet. We are the third rock from the sun. For those you know, that's also a very popular comedy. So we got to do something about it. So let me talk to you about the threats, the opportunities, and also how do you avoid greenwashing? And I will link it back to the ESG and the SDGs. The first thing, so based on our research within Grant Thornton itself, we've noted that there are six key points when we talk to our clients and when we talk to our counterparts overseas. The first thing is, I had to put a finance element to it, and this will come in on the next slide, but ESG reporting is linked to your financial performance. Our research have noted, and I'll talk about it in the next slide, that ESG is the way to go. But please don't go, the next thing is, don't do greenwashing. The next thing is, as you know, in July and August, the industry was very, very, very abuzz because of the ISSB standards. The International Sustainability Standards Board have come out with the S1 and S2 standards. There is a cornucopia of standards, a smorgasbord, but again, we are standardizing along the way. Growing investor demand, as His Excellency has mentioned, green financing. He is also the first province, I think the first government entity I've ever heard that is selling carbon credits globally. I don't think other entities, or I've not heard of any other countries that are doing it, so good on His Excellency on taking the charge on that. Sophistication around managing stakeholders. A lot of banking and finance colleagues sitting here have a lot of stakeholders, maybe from your authorities like BNM, Securities Commission, even local counterparts. So sophistication, I think we are getting more and more sophisticated along the way. Increasing regulation and legal challenges. This is an interesting one because I think as governments and countries are holding the directors more accountable towards ESG, I would say targets and guidelines, governments are also taking directors accountable for their ESG targets. I think everyone knows the famous Exxon Valdez case, Deepwater Horizon, and recently also the recent case in Nigeria where the Dutch courts ruled that the Shell directors were liable for any environmental damage done by the directors itself. The last thing that we see is also wariness on new report standards and reporting needs. This is an interesting one. We've got things like the SRI Sukuk bonds that are coming out from Indonesia and Malaysia. You've got carbon credits. You've also got regulations coming up from the bankers themselves, UOB. So this is something that we need to develop and we need to address. So let's talk about the first thing in the thing. Why go ESG? And why adopt ESG? It's quite straightforward. Your cost of capital every banker should know this, is lower when you are ESG compliant. What we have noted, based on our research also, is that when you have a high ESG compliance or high ESG say, initiative, you are very well aware of your business needs. You've done an analysis of everything end to end. And you're also taking advantage of whatever, I would say, funding that is coming up with the government side, and you're able to execute that on your client side. But the final thing also is that as an organization, you're remapping, you're readdressing, and you're redeveloping your entire process cycle. The next thing is sustainable finance issuance is growing rapidly. In 2020, that was the COVID year. I mean, the data only came out until 2020. We can see that green bonds have grown exponentially. Sustainability-linked bonds are now growing. Malaysia used to have the double tax deduction for SRI bonds or green bonds. We have now expanded that to SRI-linked bonds. And this is something that is growing. In my experience, I'm seeing a lot of my clients developing SRI-linked bonds because, number one, investors are looking for it. Number two, clients are looking for it. So this is something that you should consider, and I think as finance institutions, go out there and seek and talk to your clients, if any of the clients out there, see how you can adopt these SRI-linked bonds and take it further. The next thing, but when we talk about ESG, I think the main thing that we have to talk about is there is a cornucopia of standards out there. And all this is driven by who here is an auditor or an ex-auditor? Put up your hands. I only see one. Okay, if you are too embarrassed to admit it, I understand. But we all know this term, right? Materiality. Everyone talks about materiality. The definition of how you report ESG boils down to materiality. And there's this big debate globally going on. Do we talk about single materiality or double materiality? I think when you talk about the global standards, a lot of us, from an investor point of view, you talk about your IFRS, your ISSBs, Malaysia, we've got MASBs, the Standards Board. You talk about single. What is your impact to the world? Right? But what sustainability reporting, and I think a lot of the Europeans and the Global Reporting Initiative is coming out with, is double impact. What is your impact to the world? What is the impact to the world to you? And that is something very important, because if you read through any sustainability report, it's important to know, and it's important to identify what you have left behind in your world. Like they say now I can use my SPM Malay Karangan, leaving your tiger stripes behind. What is your tiger stripes that you are leaving behind? And by the way, we only have 150 tigers left, so please be careful of them. So, when we talk about sustainability reporting, it's not only about your financial results. Everyone talks about metrics, metrics, metrics. It's not only about that. You have to talk about your impact to the environment, your impact to society, some things you can't measure, but we have to start developing that and start reporting that to go towards sustainability development. Just a quick update. So Europe has come up with the CSRD, the Common Standard Reporting Sustainability Reporting Disclosure. So eventually, if you are part of the EU supply chain or your clients are part of the EU supply chain, you will have to start considering those reports. I know a lot of bankers are now asking for Scope 1, Scope 2, Scope 3 emissions. Start measuring that now. And if your clients are even asking or thinking about going green, you should have a quick chat with your clients or your counterparts or even your financiers and ask them, yes, you are telling me S1, S2, S3, but what is your impact to the society? What is your impact to the environment? And number two, how do I know you're not greenwashing? How do I know you're not green hushing? Apparently, that's a new term that's being brandished around. And there's now a term called rainbow washing. Again, I will focus more on the sustainability and the environment part here. Talk to them, ask them, what are the controls and the systems that you have in place to make sure that this reporting is correct? Is it third-party assured? Is it discussed? And are you getting these things verified? So greenwashing claims are a big thing. I think you've all heard of companies in the US saying that, I would say investor activists taking action against companies that are greenwashing. Fun fact, who invented the term carbon footprint? Daniel, can we spare one Monopoly board? Okay, we can't spare a Monopoly board, but yeah, I'll give my Monopoly board. So who can tell me that they've invented the term greenwash, carbon footprint? Anyone? Close enough. It was actually BP. There we have it, right? So we have to see what is the narrative in place. A lot of companies are under the pressure to report positive ESG results, and that becomes a form of misrepresentation and manipulation. Misrepresentation because we want to report good results, manipulation because we want to play with the results. I know in Malaysia you've got the FTSE for Good index, you've got the MISCI index. We play around with the metrics to fit our results. I don't think this is the way to go. It is about your lasting impact, your non-financial impact. So let's go on and try to figure out how do we solve this properly. Definition of ESG standard is not standardized from region to region. This applies to industries also. I'll give you an example. The definition within the claim of going net zero or net neutral is differing from organization to organization. Very recently in Malaysia, there was a very famous organization that has been called out because they didn't include their scope 3 within their net zero targets. You all know who that organization is. And that's not the way to go. When you talk about net zero, it has to be global and in terms of your whole targets. Luckily, the second one is being solved, but there's more that needs to be done. And blindly following a trend without any backing whatsoever. This is an interesting one because a lot of them report your figures without any sort of system in place. We have a discussion with our counterparts, with clients, with stakeholders, and we are realizing that a lot of them are pulling figures from the air. I dare say that actually ESG is not difficult. I would like to say that actually you don't need consultants for ESG reporting. Bursa Malaysia has their sustainability reporting guidelines out there. You've got your 9 indicators that you have to start reporting by year end. Everything is online. It is more simpler to follow than your regular financial accounting. So basically, go online, start searching for it, everything is available. This is an interesting one. So now, I think ESG word soup is a very difficult topic because you've got all these ecosystems, you've got all these frameworks, but at the same time, we don't have any sort of guidance or best practices. In Malaysia, a lot of us follow the Global Reporting Initiative, which is, I'm also part of the GRI. It's the oldest standard out there. The ISSB is coming in and kind of building cross-compatibilities. But you've got other targets. A certain Singaporean developer has come in their annual report and given 10 standards. Now, if you read that particular developer's report, it doesn't make sense because it's as though you're shopping. Other companies have also kind of taken it accordingly. A certain petrochemicals company in Malaysia also has done their ESG reports a bit more liberally. So eventually, we need to fix all of this and we will have to redevelop this entire spectrum. But one thing I can tell you is that we are getting to a better place. In the next 1 to 2 years, with assurance coming into the picture recommended by Bursa Malaysia, we will eventually start seeing standardization. And we've also been personally involved with a lot of petrochemicals projects and also for timber and plantation projects. We are seeing that clients are looking for it and asking for it. And who's asking for these reports? The financiers, i.e. you. But I want to put down this very briefly. I'll give you some key figures, and I'm drawing it back to the SDGs. This is important because it's not capitalism per se. It's not about your numbers. It's about leaving your lasting impact. The SDGs, we've got 17 goals, 169 target metrics, and 191 member states. Everything, when you do, align it to the SDGs so it gives you a guiding principle of what to follow and how to follow it. The questions remain. What is the best approach for setting out your ESG practice and reporting? How do we validate and quantify our standards in reporting? Too many competing standards in which to adopt. These conversations are being done and they're being answered right now. Because at the end of the day, we don't want to be in this position. So everyone knows the New Yorker. Okay, a cartoon came out from the New Yorker. Yes, the planet got destroyed, but for a beautiful moment in time, we created a lot of value for shareholders. It's not only the value for your shareholders, it's the value for your world. So as Aesop once said, not the soap company, a crust eaten in peace is better than a banquet eaten in anxiety. So ladies and gentlemen, let's eat our crust peacefully, not panic in a wildfire. Thank you.
Thank you so much, Kishan. As I was looking through all the slides earlier, when I saw that, I had to do a double take on how that represented the earth and the children, and it's very, very scary.
Yeah, it is.
It's very, very scary.